Hey everyone, Verizon reported third quarter 2023 earnings results that sent the stock soaring by nearly 10% for one of the best days in Verizon's history. Now in this video, I'm going to highlight why Verizon's stock price was soaring. I'm going to review Verizon's third quarter earnings results, and I'm also going to answer if it's too late or if dividend stock investors can buy Verizon stock after the stock price has increased meaningfully. So let's jump right into the third quarter earnings results.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Starting with total revenue and adjusted earnings per share, which each declined by 2.6% and 7.6%. You might say, wait a minute, the stock price soared after the company reported falling revenue and earnings per share? And yeah, that's the interesting thing about Wall Street and the stock market is sometimes stock prices will increase when results are bad, but they weren't as bad as was expected. So analysts were already expecting the company to have this type of a quarter, but the results weren't as bad as expected. Also, the company reported very good cash flow numbers, and I'll show you that here on the right side. Free cash flow in the 9 months ended September 30th have come in at 14.6 billion. That's better than the 12.4 billion in free cash flow Verizon reported during the same 9 months in the previous year. So a 2.2 billion increase in free cash flow. Also, management during the conference call increased the forecast for the full year by $1 billion to 18 billion. So now management thinks that Verizon will bring in 18 billion in free cash flow for the year. That's a $1 billion increase from the previous expectations. So now that's 1 billion more than Wall Street was expecting from Verizon. So because of that news, they were enthusiastic about Verizon's prospects. Another point of good news was that Verizon's wireless service revenue increased by 2.9%, whereas total consumer revenue declined by 2.3%. And I'll show you a little bit later in the video why investors like this news. The portion of the business that's in decline is not the area where investors are most interested with Verizon. So I'll show you how there's a difference between Verizon's equipment revenue and its service revenue and how the service revenue is more interesting for Verizon stock investors. In the third quarter, they added 434,000 broadband net additions. This is an area of growth for Verizon and AT&T for that matter. Most people that want a cell phone subscription already probably have one, so that area of the business is not in growth mode. But the broadband area is in growth mode. There's still room for growth in that area, especially growth in upgrades, in upgrade of speed, because wireless broadband or broadband home internet, high-speed internet is becoming more and more important as people are using it more for streaming content, and so they're needing higher speeds because now you've got four, maybe five people in the household that are all streaming content, perhaps simultaneously, and so you need that fast internet speed to be able to handle all those streaming subscriptions, all those streaming connections. And here's why investors like when Verizon adds more wireless service revenue, because the wireless postpaid churn is extremely low. You've got 0.9% for wireless retail postpaid phone churn and 1.15% for overall churn. This higher number includes things like tablet and watch connections as well, but for phones specifically, over 99% of customers renew their phone subscriptions. It takes a lot to get a customer to cancel their phone subscription, and so investors prefer Verizon grow this part of the business compared to the equipment revenue side of the business, which isn't as sticky as the retail postpaid phone churn. I'll tell you one thing I was happy to see from Verizon was this statement here in their focused priorities through the end of the year. And this middle statement here, continuing momentum in consumer mobility with segmented and disciplined approach. Segmented and disciplined approach. This seems to be a code within the telecom industry, and I'll show you AT&T reported results on the same day as Verizon. I did a video on AT&T yesterday, and they said the identical thing, segmented and disciplined report approach, and I'll show you that here. This is 2023 business priorities for AT&T. And what do we have here? Execute consistent and disciplined go-to-market strategy. And it's not a coincidence that they're using these same terms. This is AT&T and Verizon essentially communicating with each other through the public markets, telling each other, look, if you're not going to offer significant promotions to attract customers, we won't offer significant promotions to attract customers either. You keep a lid on promotional activity, we'll keep a lid on promotional activity. In other words, we won't encroach on your business, you don't encroach on our business. Let's keep the average revenue per user higher without these promotions so that you and me, Verizon and T-Mobile, and AT&T, we can all generate better profitability because we're not fighting with each other for customers trying to offer better deals and better promotions. And so AT&T has been saying this, and now Verizon's saying it, and so they're essentially agreeing with each other, right? Even though they're not agreeing with each other, explicitly. They're, indirectly kind of saying we like that you're saying you're not going to go after customers aggressively, and we'll say that too, and we'll follow up, and we won't offer big promotions either. And you will have noticed in the most recent quarter, and I'll touch on this when I show you the equipment revenue decline. In fact, that was one of the reasons why Verizon's total revenue was down, was the promotional activity for upgrades for this latest iPhone cycle, the latest iPhone release, was muted. You didn't see very exciting promotions to get consumers to upgrade to the latest iPhone, which typically is the case with these telecom companies. In fact, T-Mobile was behind even Verizon and AT&T with their offers. Their offer was not exciting at all. And all year long, T-Mobile has been the one that's been disrupting the industry in terms of keeping competitive forces low, competitive pricing low. But now even T-Mobile is coming on board with Verizon and AT&T, not offering significant promotions to upgrade. So here's what I was talking about from Verizon. 4.2 million wireless postpaid upgrades. This was down 26.2% year over year. 26.2% down year over year. People are not upgrading their phones at the rate they were last year, 26% lower. And primarily because the deals to upgrade weren't as robust this year compared to last year. Last year, phone companies, Verizon, T-Mobile, AT&T had better deals, and so customers were more excited about upgrading to the latest phone. Not so much this year. And so that's okay for Verizon because the bread and butter for Verizon isn't upgrading people's phones. It's that monthly revenue, that monthly subscription revenue. So if it can keep customers without offering them big deals to upgrade their phones, that's even better for Verizon because those customers, that revenue is more sticky than the upgrade revenue, than the upgrade cycle. So digging deeper in the competitive environment, you could see here total wireless revenue was 19.3 billion for Verizon. That was up 2.9% year over year, driven primarily by pricing actions implemented in recent quarters. So the higher revenue is due to higher prices. Verizon is actually increasing prices rather than decreasing prices. And that's good news for Verizon stock investors, but it's also good news for AT&T stock investors and T-Mobile stock investors. It furthers the theme of, hey, let's not compete against each other by lowering prices to try and attract customers. Let's keep pushing prices higher so three of us can all profit better compared to if we were to lower prices and compete with each other, it would be worse for us, maybe better for customers. Another big item I'm watching for Verizon and AT&T for that matter is their debt repayments, and Verizon at 126.4 billion in unsecured debt. That was a 4.9 billion improvement compared to the prior quarter and 5 billion lower year over year. That's good news because remember, interest rates have increased significantly year over year. And so as this debt starts coming due, it will be good for Verizon to have the cash on hand and pay off this debt rather than refinancing, at least in the near term. And if you watched my video on the total debt for Verizon and AT&T and whether or not it's a big risk, you will have noticed that Verizon, most of their debt is not coming due in the next few years. Most of this 100 something billion dollars in debt is coming due like 8, 9, 10 years away. So incrementally, as these debt repayments start to come due, I think it would be good, it would be prudent for Verizon to pay this off and then look to refinance later on down the road. So total retail postpaid net additions for the third quarter were 581,000. That was up 388,000 from the prior year period. And the good news is the segment that it's experiencing declines, which is in the consumer retail postpaid net additions, the rate of decline is decreasing. So you saw they lost 189,000 subscribers in this segment in the third quarter of 2022. That fell to 136,000 in the second quarter of 2023, which fell to 51,000 in the third quarter of 2023. So the area of loss is decreasing, and that's good news for Verizon stock investors. Consumer wireless postpaid average revenue per account was $133.47 for the third quarter. That was up 4.5% year over year, again driven by pricing actions implemented in the most recent quarter, pushing customers more so to selecting premium unlimited plans and paying a higher price per account. So again, good news for Verizon stock investors, but also good news for the industry as pricing moves higher and profitability industry-wide increases. So I wasn't surprised that Verizon stock price jumped following these results with better average revenue per account, better cash flow prospects, furthering the disciplined growth prospects. I liked what I saw from Verizon. I'm not surprised that the stock price was up following the results. Now, if you're thinking about buying Verizon stock for the dividend and you're asking if it's too expensive to buy now that the stock price increased, I would say it's not too expensive. You could see the forward price to earnings ratio, even after the jump, Verizon trading at a forward PE of 7.288, which is not expensive considering Verizon's prospects going forward. It's not going to be a fast growth stock. It's not going to make you rich overnight, but it's a stock that can offer you steady passive income for several years into the future. So if you're interested in Verizon stock, I would say the stock is a buy. Their valuation is appropriate. So before I let you go, if you've gained any value from this video, please subscribe to the channel. It'll really help me make more videos just like this one. Thank you for watching.